Ladies and gentlemen, good day and welcome to PCBL Ltd Q4 FY2024 Results Conference Call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during a conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Jain from ICICI Securities. Thank you, and over to you, sir.
Thanks, Manav. Good afternoon, everyone. Thank you for joining on for PCBL Limited Q4 FY24 Results Conference Call. We have PCBL management on the call, represented by Mr. Kaushik Roy, Managing Director, Mr. Raj Gupta, CFO, Mr. Saket Shah, Group Head Investor Relations and ESG, Mr. Pankaj Kedia, Vice President, Investor Relations. I would like to invite Mr. Kaushik Roy to initiate the call with his opening remark, post which we will have a Q&A session. Over to you, sir.
Thank you so much. Very good afternoon to each one of you and a warm welcome to the call. Thanks for joining. As you know that PCBL is the seventh largest globally in carbon black, with a very, very strong presence in rubber black, performance chemicals and specialty chemicals. And over the years, as you must have observed, that we have tried our best to consistently perform well, riding on the additional capacity and a strong focus on research and development. And also over a period of time, we have built a diversified product portfolio. Simultaneously, we have also increased our global footprint, and I'll talk about it later in detail. FY24, there are ups and downs, as you know, globally. There are uncertainties in the global market because of these wars which are going on. There are issues with U.S. economy as well as the European economy. But I'll say that in spite of this difficult situation, PCBL has performed pretty well, and we are confident that going forward, we'll do the same thing again, repeat the same thing again. In FY24, let me now talk about this year. In FY24, we commissioned the Greenfield Carbon Black project in Chennai with 147 KT, 147,000 tons. And with this, our total installed capacity for the company on consolidated basis now stands at 770,000 tons. In parallel, we have also commissioned the cogeneration captive power plant at Tamil Nadu site, having a capacity of 24 megawatts. And with this, the total cogeneration power capacity now stands for the organization at 122 megawatts. This new Tamil Nadu Greenfield facility is based on industry standard 4.0, which provides cutting-edge technology that includes AI, machine learning, and data analytics. And we are confident that it will definitely give benefit financially to the organization as we go along. It is a smart factory that will improve our reliability, our quality, standard, and yield benefits. The plant was operating at 60% capacity during Q4, and on whole year basis, it was about 55%. And we are hopeful that we will reach full capacity in Tamil Nadu plant by Q3, Q4 of FY25. Besides this, during last year, we also commissioned one specialty black line of 20 KT, 20,000 tons, in Mundra, Gujarat. And another specialty line of 20,000 tons is under implementation at this point of time and will be commissioned during this current year. These strategic initiatives are expected to increase PCBL's total manufacturing capacity to 790 KT, 790,000 tons in the current year itself, further strengthening the company's position in the industry. And you all are aware of that recently PCBL acquired further land measuring 28 acres in Mundra and this will help us in future expansion requirements. I'm also happy to announce at this point of time that we are going ahead with brownfield expansion of 90 KT, that is 90,000 tons of carbon black at PCBL Tamil Nadu facility. This will be completed in two phases. The first phase, which will be having 30,000 tons capacity, and the second one will have 60,000 tons of capacity. And we expect to complete this expansion next year. And once this expansion is over, this will take our total capacity to 880 KT, close to 9 lakh tons. We are also in parallel evaluating a new greenfield expansion for which necessary discussions are already underway. This will take our capacity beyond 1 million tons in near future. And this will also help us to significantly increase our global market share. Most of you are aware of that PCBL recently acquired Aquaform Chemicals Private Limited, which is a leading specialty chemical company with end applications in detergent, water treatment, oil and gas chemicals, and multiple other applications. This acquisition allows us to enter global specialty segment with multiple applications and propels PCBL from single platform to multiple platforms, enhancing its offerings in line with company's vision of becoming a trusted global player with a diversified specialty chemical portfolio. It represents a pivotal moment for both PCBL and Aquaform, strengthening the company's position in fast-growing and high-margin specialty chemical sector. For your information, Aquaform derives 75% plus revenue from Western markets, USA and Europe, and these markets are pretty lucrative. Their key products include phosphonate, polymer, green chelates, and oil and gas chemicals. In terms of phosphonates, their global customers represent FMCG majors like Procter & Gamble, Unilever, Henkel, Reckitt & Coleman, etc. Oil and gas companies like Halliburton, Baker Hughes, they are their major customers in that particular segment. And on the other hand, there are chemical giants like BASF and Ion Exchange as their customers. It has got manufacturing plants in USA, India, and Saudi Arabia. This acquisition was completed on 31st of January 2004 at a total consideration of 3,850 crores, 3,850 crores. The current quarter's consolidated financial capture only 2 months because it is concluded on 31st January. It captures only 2 months of operations post-acquisition. At this point of time, we are working on integration of the business with PCBL and aligning the vision of Aquaform with the growth vision of PCBL. We plan to expand capacities of various specialty chemicals in Aquaform rapidly. And this would help us to accelerate the growth momentum going forward. We have also focused on another area which is a growing segment in EV battery chemicals. PCBL and Kinaltech, a Sydney-based Australian company, has executed a JV agreement on March 16, 2024 to form an Indian joint venture company called Nano Waste Technologies Limited. I'll repeat the name, Nano Waste Technologies Limited, which will develop nanosilicon additives to be used in anodes of a lithium-ion battery. The transaction involves acquiring the IPs and lab-scale assets in Australia by Nano Waste Technologies Limited for a consideration of $16 million. PCBL will own 51% of Nano Waste Technologies Limited and Kinaltek will hold 49% shareholding. It also involves infusion of INR equivalent amount of USD 28 million by PCBL in the JV company towards capital expenditure and commercialization of the technology over next 1.5 to 2 years. Kinaltek Private Limited is an innovation company specializing in advanced technologies. Kinaltek has developed a patented novel proprietary technology for direct production of metallic alloys and compounds, including nanosilicon, which will have applications in lithium-ion batteries. The technology developed by Kinaltek provides the breakthrough in production of nanosilicon, enabling lower cost and lower carbon footprint manufacturing process. Kinaltek has been awarded global patents pertaining to the above-mentioned technologies. This JV will help us to foray into the high-growth battery material segment with innovative technology, giving a huge impetus to the originally developing conductive carbon black grades like Energia to a multi-specialty material portfolio for one, enhanced battery capacity, enabling higher mileage to EV. Second, faster charging. Third, safer battery chemicals. And fourth, reduced carbon footprint and cost per unit energy stored. During the current year, we plan to start work on designing and setting up the pilot plant. In April 2023, PCBL incorporated a wholly owned subsidiary company in the name of PCBL Europe SRL in Belgium. The European subsidiary would significantly enhance our capabilities to increase research and development initiatives at our global R&D center, Sushila Goenka Innovation Center in Belgium. It will also allow us to serve our European customers better by enabling local invoicing and just-in-time delivery of both rubber-grade material as well as specialty chemicals. Coming to another area, PCBL also secured 2 patents in relation to oxidized and surface-modified grades, which will further strengthen the specialty portfolio of the company. Oxidized grades have applications in ink and coating, while the surface-modified grades improve fuel efficiency and tire life. In March 2024, our Board of Directors approved the issuance of 16 million warrants convertible into equity shares at an issue price of rupees 280 per share, aggregating up to rupees 4.48 billion to promoter group. This would help us to deleverage the balance sheet. It also demonstrates the commitment of the promoter group towards the growth of the company. Let me focus on another area. At PCBL, research and innovation are important drivers of both technical advancement and business expansion. In recent years, the company has intensified its commitment to research by making substantial investment in infrastructure, human capital, and streamlined process. These investments have significantly bolstered PCBL capabilities in new product development, customization, and application, as well as process efficiency. Let me now give you some detail of our Q4 FY24 performance. Let me talk about some numbers. PCBL reported a strong quarter with the highest ever volumes and best ever quarterly financial performance despite the prevailing geopolitical situation, which I talked in the beginning itself. During the quarter, our consolidated sales volume was 142 KT, up by about 20% on year-on-year basis, while consolidated revenues from operations was rupees 1929 crores. EBITDA grew by about 166% year-on-year basis to 332 crores. PBT stood at rupees 149 crores, while PAT increased by 9% year-on-year to rupees 111 crores. Consolidated EBITDA per metric ton in carbon black business stood at rupees 22,600. The profit for the quarter factors in an interest cost of rupees 60 crores approximately and amortization of rupees 15 crores relating to acquisition of Aquaform Chemicals. During the quarter, PCBL Tamil Nadu achieved a sales volume of 19 KT, that is 19,000 tons, which is roughly about 60% of the capacity available during the quarter. We expect further ramp up of Tamil Nadu facility in the current financial year. And as I mentioned earlier, we are hopeful that by the end of this financial year, we will be in full capacity of the plant. Of the total carbon black sales volume, domestic sales volume stood at 88,000 tons, while international sales volume stood at 54,000 tons. Now, moving on to our segment performance. Tire accounted for 82 KT or 82,000 tons. Performance Chemical reported sales volume of 45 KT or 45,000 tons. We also achieved specialty sales volume of over 15 KT or 15,000 tons, which is again the highest ever in our history. We continue to expand our product portfolio and customer base. The volumes in our recently launched Energy brand is increasing, and that shows acceptance by the customer. Trials are being conducted by EV battery manufacturers, and we expect good volumes once key approvals are received. We also achieved the highest ever power generation and sales volume during the quarter. Power generation increased from 156 million units in Q4 2023 FY to 181 million units during the quarter, with external sales volume of 106 million units as against 95 million units in Q4 2023. PCBL's average realization stood at 3.98 rupees per kilowatt. With commissioning of 24 megawatts CPP at Tamil Nadu, power generation and sales volume would increase further going forward. The Q4 FY24 financial includes 2 months of financial for recently acquired Aquaform Chemicals Private Limited. For FY24, our consolidated sales volume was 531 KT, up around 20% on a year-on basis. Our consolidated revenue grew by 12% on year-on-year basis and came to 6,420 crores rupees. EBITDA grew by around 39% year-on-year to rupees 1074 crores, and PBT stood at 676 crores, while PAT increased by 11% to rupees 491 crores. And I'm happy to share with you that this is the first time we have crossed an EBITDA of rupees 1,000 crores per annum. Thanks for all your support. The long-term prospects of all the business segments generally look very positive, and we believe there will be adequate business potential to sustain the growth momentum what we have at this point of time. Considering the changes in global supply chains and consumption patterns, demand and margins in specialty chemicals should continue to remain strong. Structurally, we are increasing resource allocation to this segment. Let me talk about current market scenario and outlook now. The Indian tire sector is witnessing a strong growth opportunity, and the industry appears to be well positioned to drive a long-term growth opportunity. Indian tire sector is a big beneficiary of supply chain de-risking strategy by global OEMs, following the continued supply chain disruptions over the last 3-4 years. Adding to this, favorable government policies that advocate Make in India. We expect tire industry to grow by high single digit to low double digit for next few years. The only concern, which I also talked about in the beginning, is the worsening geopolitical scenario. While we don't have much trade with conflicting countries, there may be indirect impact due to trade route disruptions, high oil prices, and inflation. We as an organization remain watchful of the developing situation and continue to work on strengthening our supply chain, improvement in our product mix, and also cost optimization initiatives within the organization. The recent Red Sea crisis has led to export freight remaining elevated on routes to Europe. We remain engaged with our customers to pass on the elevated freight cost to our customers. However, this comes with a lag effect. And it may not be full, it may be partial. And with this, I think I have given you more or less the complete picture, and I conclude and open the house for any question. Thank you so much.
Thank you. We will begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Shailesh Raja from BNK Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. Europe ban on carbon black will start in next 38 days. So do you see any change in the market or the buyer's behavior? So players like Orion Engineered Carbon, they mentioned in the recent call that their company is witnessing competition from Indian suppliers in the Europe market. So
sorry, we are doing. I would request you to please use your handset to ask questions.
Just hold on. We are not able to hear anything. Just hold on.
Yeah, you can hear me now?
Yeah, can you repeat your query?
Yeah, you can hear me now?
Yes.
Yeah, so Europe ban on carbon black, it starts in next 38 days. So do you see any change in the market or the buyer's behavior? If you see the players like Orion, they mentioned in the recent call that the company is witnessing a lot of competition from Indian supply in the Europe market. So on an average, we are doing roughly 50K volumes in the exports. So in that, how much is going to Europe market right now, and how do you see that mix improving in the next 2 years?
We are doing about roughly 14-15% of our international volume in Western Europe. And that market is becoming bigger for us. We are also laying down our infrastructure, supply chain infrastructure. In last 2 years, we have opened number of offices. We have put up an R&D center. We have created a subsidiary and now we are also invoicing our European customers locally. Europe holds a lot of potential. It is very large when we combine all the Western European countries. It's about almost close to 2 million ton market, and they are net deficit, importing significant quantities from in past we used to import mostly from China and Russia, but now they're also looking to source from other countries. So it creates a large opportunity.
Yeah. So can you give some numbers, sir? How the mix will change?
We did about 28,000, 28,500 in Europe. Yeah.
Europe, yeah. So how this number will change, sir, in next 2 years?
It will also depend on, being the industry leader in India, we also have commitment to the local tire manufacturers. So, and TN, we just commissioned in FY24, we are going through that approval process from the major customers. So we'll also have to, kind of create a balance between how much we would allocate to overseas market. We are currently constrained by capacity in a way. So as new capacities come up, our absolute volumes will go up. And like I said, that Europe and North America holds a lot of opportunity now that they are looking to change their sources of procurement.
So after this 1st June, roughly the opportunity is going to open up roughly around 1.5 lakh tons of volume in carbon black because of ban on Russian carbon black. So in that 1.5, how much we can get it, sir, roughly?
See, it is not that, Russian ban means the Russian material is not going to go to Europe. It will still be going. And typically the route will be via Turkey. It has started, but yes, there will be some impact. The moment it is a longer route and the Turkey to US route through Turkey, there is some impact, of course. And as Raj just now mentioned, that Europe is a critical focus area for us, and the market is anyway, there's a supply deficit. So we are looking at Europe, and our desire is to grow as quickly as possible in Europe. Last year we did about 20,000, as Raj mentioned, 28,000 we did last year. And we'll definitely be looking at a very sharp growth. It's difficult to say exact numbers, but the intention is to grow as quickly as possible. Exact number will depend on the scenario over there, the opportunity over there. But we are already working with quite a few European customers very closely, and they are showing keen interest to have our product. So we are very hopeful for a very fast growth over there.
Okay. So can you give us the capex number for next 2-3 years? How much is maintenance capex and the growth capex in carbon black and chemical business?
Capex, currently we are looking to add 90,000 tons in Tamil Nadu and another 20,000 tons in Mundra, which will be a specialty line. But this can only cater to about a year's kind of a requirement. So we have already started working on, at least on the discussion stage, for a larger greenfield plant. For the brownfield expansion of this 110,000 tons, the capital outlay will be around roughly 500 to 550 odd crores, which will be spent over current year and next year. And by next year, beginning, we will be starting the construction on this greenfield project also. And that would be kind of similar to a TN size, Tamil Nadu size. So where the capital outlay will be around, roughly say, 900 to 1,000 odd crores. But exact specification or the size of that greenfield is still under consideration, and we will come back to you with more clarity once we have finalized everything.
Okay. In the chemical business, sir?
In the chemical business, in India they have some capacity, which we plan to utilize this year and next year. So in India, we will be doing some small brownfield where we would not be incurring much, maybe about 100 odd crores. In US, they are now running at very high capacity. US in 2 phases, we will be spending about 180 odd crores over current year and next year.
Okay. So totally you are going to spend around 1,600, 1,700 crores over the next 2 years.
Maybe over 4 years. I mean, that will be over next 4 years, 4.5 years.
Okay. So just my rough estimate of cash back over the next 3 years is roughly around 1,000 crores, and the working capital requirements are around 650 crores. So next CFO, including interest, is around 2,400 crores. Then again, this capex of around, say, 1,700 crores in next 3-4 years. Then the debt reduction, including the warrants we are getting from the promoters, that is around 450 crores. So rough debt reduction will be only 1,100 crores over the next 3 years. My understanding is right?
I couldn't understand exact math, but broad numbers. Just to give you a sense of, some color around, how we look at say FY25. We did about 1,075 crore of EBITDA this year, which is FY24. Tamil Nadu capacity was only utilized to the extent of roughly, say, 50,000 tons. And we can go up to 125, 126. So that 75,000 ton capacity, additional capacity is available. Right? So that 75,000 ton capacity is going to give us roughly about 200 odd crores at current run rate. Right? Aquafarm in the current year, only 2 months financials got consolidated. Right? And we believe that Aquafarm on a full year basis is going to add another 250 to 300 crores.
Okay.
Right? Now, if you do the simple math and if you add these numbers, and I'm not considering anything on the efficiency side, like yield improvement or operating leverage in PCBL, I'm not even considering that. If I simply were to add up these numbers to our current year performance, then we are already looking at the top around 1,400 to 1,500 crores. So there will be enough cash generation not only to support our growth plan, but also to manage our debt servicing obligation. If that was your question, your voice was not very clear, but
correct. Yes, sir. Yeah. Thanks for answering this. Thanks.
Thank you.
Thank you. The next question is from the line of Aditya Khetan from SMIFS Institutional Equity. Please go ahead.
Yeah, thank you, sir, for the opportunity and for the detailed presentation in the opening remarks. So my first question is this Tamil Nadu plant of 90,000 tons. So we are planning to commission this by Q2. So we should factor in volumes from second half of FY26.
It will come in 2 phases, Aditya. The first phase will be around 30,000 tons, and which should be ready by end of this year or maybe first quarter of next year. Right, so that capacity will be available almost for full year of next year. The 60,000 ton capacity will come around, third quarter or fourth quarter of last year. Next year.
Okay. And so you are talking onto the greenfield expansion. So you highlighted that the capex could be in the range of 900 to 1,000 crore. So that is the estimated capex as of now.
Like I said, that we are yet to do the final workings on the size, on the specification, like the technology that we are going to use there, and also the location. So this is very tricky at current stage, but typically in Thousand Plant, 150,000 tons is considered as a normal economic size plant, and therefore we just see from Tamil Nadu capital expenditure, and therefore this number. But exact numbers we will come back to you once we have done the math, etc.
Got it. Sir, onto the Aquafarm, sir, I believe, sir, we have not shared any sort of breakup like, so what is the breakup of capacities into phosphonates and the green chelating agents, and what are the utilization level currently and what we are targeting for next year?
For Aquafarm, as I mentioned a while back, they have 3-4 major products. The biggest one is phosphonate, which is 50% plus. And in phosphonate, they are global leader, you can say, okay? There's one company from Italy and this Aquafarm. And then other than that, they have oil and gas chemicals, which is produced in USA. And then green chelate and polymers, which are produced again in India. Now, at this point of time, in India, the capacity is not fully utilized. Our first target in India is to utilize the full capacity. For example, last year, FY24, we were somewhere around 65% capacity utilization. And we are hopeful that in this year we will be going beyond 80% for sure, maybe closer to 90% capacity utilization. And as Mr. Rajgupta said a while back, in USA the capacity is already fully utilized, and we are going for capacity expansion over there by spending capex. So this is the situation as of now.
Okay. And sir, as far as mentioned that the estimated EBITDA from the Aquapharm is 200 to 300 crore in FY25. So sir, subsequently, what is the estimated PAT for FY25 and FY26?
We don't want to talk about FY25 numbers, and also this 200, 300 crore. These are broad, indicators. These are not numbers because we are yet to look at the market condition, etc., etc. So we will not talk about, 2025 performance.
So I think give us some time. I think you'll see substantial improvement in performance of Aquapharm vis-a-vis what they did in the past in recent times. But as far as numbers are concerned, give us some more time to get back to you with more accuracy.
Yeah, that number was basically extrapolation of last 2 months. I mean, those numbers which we consolidated in FY24 financial. I mean, I just gave an extrapolation of that for next year.
Yeah, so that may not be the exact fair calculation or the right way to look at it. We have already started taking a lot of initiatives, both in India as well as in USA, focusing on full utilization of capacity, focusing on new product development, focusing on cost control and cost reduction initiatives across the whole organization, particularly in the area of, say, manufacturing, procurement, logistics, etc. So number of areas we have started focusing on. So give us some time. I'm sure the result will be very positive, and all of you will appreciate, I'm sure.
Got it. So just one last question, sir. Onto the carbon black capacity expansion, sir, is there any estimated figure how much expansion is coming in India for next year and for the subsequent year? And will this expansion put any pressure onto the supply side if supply goes beyond demand? So we have to be dependent on export, so markets like Europe, where we have a lot of potential.
It is not about just expansion of others. The largest expansion is obviously happening with us now in India, as you are aware of, with Chennai plant. There are some expansions planned by some other companies. I'm not, giving too much of detail on that, but because of obvious reasons. But at the same time, other than Indian market, our focus has been on international market for some time. While as the responsible and the leader of the market in India, it is important that we take care of our customers' interests in India first, which we are definitely going to do and will continue to do so. At the same time, we are looking at international market in a big way. As I mentioned during the opening remarks, almost 40% of our production goes out today to international market. So that shows, and we have started putting all the building blocks in terms of having logistics system, in terms of having warehouse, our own offices so that we can do local invoicing, our own people from technical and commercial side so that they can engage meaningfully with our customers over there, overseas customers. So it is not that, we'll go away from Indian market. We will not. We'll remain the leader in Indian market. At the same time, we will be growing outside India in a big way. And that's why we're adding so much of capacity. So I don't think there will be any major pressure on us here in India.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjay Jain from ICICI Securities. Please go ahead.
Yeah. Thank you, sir. Thanks for taking my question. I know you mentioned that Aquapharm has not performed its full potential in.
Can you please be louder? We are not able to hear you at all.
Can you hear me now?
Yeah, it is better now. Yes. Go ahead.
Okay. So first on the Aquapharm, I know you did mention that this quarter is not a representative one.
Right.
But what has gone wrong? It is general weakness in the chemical business, the transition. That's number one. And number two, what are we fixing in terms of leadership in the Aquapharm? That would be one key area to watch because I think promoter will be moving out of the business, so we need a leader there. So what is the thought there? And number three, how is the competitive intensity in that business now that phosphorus prices have also fallen and the ease of procuring phosphorus is there versus what it was, say, a year and a half back? How are we looking at this business and what will drive the turnaround?
Okay. So about the numbers last 2 months, and naturally it was, we were a bit disappointed, to be honest. It was not very encouraging and we're not looking at that kind of number. So that's why we were disappointed. The reason, I will say, is a mix of things. As you rightly said, the market was not really good. Chemical was at its lowest possibly last year. So that is one of the reasons. The other reason is obviously, they were kind of internal, they're planning to sell this company off. So there was a lack of focus. Honestly, there's a lot of focus on the operation and its efficiency and other parameters. So they lost sight on the business, to be honest. And as you also rightly said, that it was a promoter-driven company. They were the MDs and joint MDs, etc. And they lost focus because they were in a mood to sell it off. So naturally, it impacted the whole organization. They unfortunately also ended up with one problem, which was possibly because of lack of focus. So ended up with a very high inventory, at a high cost inventory of raw material because of maybe poor planning, etc. It happened. And eventually they had to liquidate that at a very low price in terms of sales price and made huge losses there. So the combination of reasons, these are the basic things now. Now, let us look forward. What is the point in mulling over this, whatever has happened? Promoters are already out of this, by the way. Okay, they are not involved at all in this business at all at this point of time. So all the decisions are taken by us, our PSG, basically, right? And as far as the Aquafarm team is concerned, it is in terms of skill and capability, I'll say it is quite decent. Maybe some difficult, some areas not so good, some difficult calls we might have to take, or rather we have started taking already to bring in right kind of skill and right kind of competency there. So that has started happening already. Going forward, we'll also be looking at a business head to take care of the entire business. We're already on the search, and I think in next 2 to 3 months' time, the person should be in place. So these changes are happening in the team. At this point of time, there's a team from PCBL who are kind of in deputation over there to look at various aspects of the business. I'm personally spending a lot more time on Aquafarm to ensure that we are able to set right kind of strategy, devise right kind of strategy, and set right kind of direction and action plans, and then drive it very hard. We have also engaged McKinsey to help us in this journey, the initial journey, to define the roadmap as we go along. And because of this reason, we feel very confident. And I talked about primarily, 3-4 critical areas. One is utilization of the full capacity. One is new product development, like better portfolio. Third one is efficiency across different functions, especially in procurement, in logistics, and in manufacturing. You just not talked about yellow phosphorus. Yes, there are changes in the pricing, and we should try and get benefit out of that. So these initiatives are already in place. And also we are trying to drive a culture of performance over there and aligning it with PCBL in terms of the KPIs and BBSP and all. So this is what it is. I'll say that FY25, which is the current financial year, will be more of a transition. But I'm sure you'll get to see some good improvement in the numbers, in the performance. And I think the potential is really, really very high for this organization at Aquafarm.
Fair enough, sir. That's really an elaborate and really appreciate that answer. Second, on the carbon black side, what kind of volume growth are we looking for, say, next 2 years? Because it appears that we are adding close to 110,000 metric ton additionally, both Chennai and Mundra. And then we are looking at, say, another 200 metric ton in a green field. So we are adding 300 metric ton on a base of 800. So will that should come in next 3-4 years? That will be a fair assumption?
I think so. What you are saying is right, because we are already about 770 at this point of time. And as Raj already mentioned, that 90,000 already the work has started and will be coming in 2 phases. Mundra further expansion is happening in specialty. And another greenfield we are already looking at, which will be in terms of size, will be again somewhat like Chennai, 150,000 types. So we're looking at 250,000 to 300,000 tons addition. We are looking at maybe 11 to 12% CAGR kind of growth. That's what we are looking at. We are looking at fast growth, to be honest. We have a big ambition, and we are looking at a fast growth. We'll continue to remain leader in India. We'll not vacate that position for sure. That remains. But we want to grow quickly in the international market. If you look at our numbers over the last, say, couple of years, you'll realize that earlier, in terms of international market, we were just about 15% roughly in terms of export. And today, we have already started hitting 40%. So that shows the intention very clearly that we are becoming more and more a global player with presence across the globe.
Got it. Last bit on China competitive intensity.
Can you be just louder again? Your volume is breaking.
Okay. On the China side, how is the competitive intensity from China? It still remain benign?
I mean, it is blow hot, blow cold. Sometimes it is they're very active, very aggressive, and they start dumping at times, and sometimes they just disappear. But in a way, it is good for us. I'll tell you the reason. The customers have lost confidence in them in the process. They look at China as a kind of fly-by-night kind of character. So sometimes they come in, sometimes they go out at their convenience, and the reasons only is known to them. Nobody else knows the reason really, which in a way helps us because customers get much more confidence with companies like us who are who believe in long-term strategic relationship rather than spot transactional relationship. So it helps us. And as far as the numbers and the competition in terms of technology, in terms of productivity, yield, etc., I think we are one of the best in the world. So why should we bother about China at all? We have enough space to play.
Got it. That's very helpful, sir. Thank you very much, and best of luck for the coming quarters.
Thank you. We have our next question from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thanks for opportunity, sir. Sir, just one little bit more on this aqua farm. I have no doubt you have seen some really big opportunity in this business and the segment, and that's why we paid this much amount, whatever we have paid. And I'm sure I will be able to generate very good return over a time. Just wanted to understand in the past, whenever in a good time, what type of EBITDA margin or EBIT margin Aquafarm was able to do. And I'm sure with your efforts and improvement, you will be getting those numbers again. So something on possibilities to talk and pass some bright times in past.
Okay. If we leave aside FY24, then in the previous year, they were operating at about 20%. And this was when they were operating at around 60-65% capacity utilization. So certainly there is significant operating leverage which is available. So, we have reasons to believe that I think the market has bottomed out. Already the things have started looking better from here, both in terms of demand and also pricing. So starting from current year, possibly we will see and margins moving up.
Okay. So, sir, their capability to generate revenue is roughly what, 2,000 crore over a time with your efforts and some balancing and all?
You're talking about revenue?
Revenue capability, yes.
No, so they achieved 2,000 crore revenue in FY23 with just about 60% capacity utilization.
Okay.
So like I said, that there is significant upside, and also we are adding new products, we are adding new capacity now, especially in US, which is currently sold out. So certainly there is significant scope both for top line and bottom line to move up.
Great. And sir, just last question. I think over a time we'll be also able to generate EBIT margin which we are generating in our carbon black and specialty chemical business. That hope is or expectation is justifiable, maybe over a time.
Yes, in terms of chemistry, it's a little more complex chemistry, and therefore it should attract better margin compared to our conventional business.
Great.
Our business is primarily, though we have, now created a large value-added product portfolio, but still almost 60% of our volumes come from, foundation grades, right, tire grades. As compared to that, Aquapharm's portfolio, contains specialty chemicals, which are complex to manufacture. The market is very niche, and we believe that, with proper kind of tailwinds, etc., or maybe, in absence of headwind, the company should perform much better than what it is performing now.
Great, sir. Wish you good luck and thanks a lot.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to strictly 2 questions per participant. Should you have a follow-up question, we request you to rejoin the queue. We have our next question from the line of Krishan Parwani from JM Financial. Please go ahead.
Yeah, hi sir. Thanks for taking my question. I think firstly on the Aquapharm, you mentioned on inventory liquidation. So if it had not been there, what would have been EBIT of Aquapharm for this 2 months? Because I think in the press release we have mentioned EBIT for this chemical. I assume this is only the Aquapharm, right?
Because I think we have already said that post-acquisition, this was only 2 months of operation since when we have taken control. And the market has been soft last year. So post the, liquidation of the low-cost, high-cost entry, etc., inventory, etc., today I think the way we are looking forward is how to align Aquapharm with our growth vision. The capacity utilization is low. That is a fact. And the markets have bottomed out in terms of chemicals is what we believe. So I think the whole thing, the way we are looking at is how do we grow the business this year. And we believe that this year we should be able to grow it nicely with higher capacity utilization and more customer acquisition. Plus we are looking, lining up a launch of a large number of new products in our category. So this will drive growth from this year onwards. This is how we look at it.
Understood. So basically, whatever that was, things should normalize, and probably as Raji mentioned earlier about it can go, EBITDA can go up to 250, 300 or even higher basis the utilization. Is that correct?
Yeah, business should perform better. We are seeing better market conditions currently. So FY25 should be better than FY24.
Understood. And secondly, 2 bits. Firstly, on the working capital side, as in how do you see the overall working capital cycle with the inclusion of Aquapharm?
Aquapharm currently, they have an operating cycle of about 90 days, which is high. Part of that is also because of, they're sourcing from a country which is landlocked, and therefore it takes more time to bring in material to India. We are looking at alternate geographies for this. And also there is scope for improvement, on receivables and payable terms. It will take us some time, but we will, and of course the market condition is also not very conducive. So maybe gradually over, next couple of years, we'll try and squeeze the operating cycle to somewhat lower number.
Understood. So maybe on a consolidated basis, 70, 75 days is the right number to look at.
It is possible, though there is no industry benchmark. It's a very niche industry. In India, there is no like-to-like business, but typically what we have seen in chemical is that 60 to 70 days is normal. So yes, there is a scope.
Noted. And just on the continuation on that, on the debt front, where do you see the debt from, let's say currently I think the gross debt is 4,700 crores, if I'm not mistaken. So how do you see it in FY25?
See, immediately next 1 year time, debt may not go down. Though the ratios would improve because we'll be generating better EBITDA, and our equity will also go up with profitability, increasing profitability. So our ratios would improve, but with the kind of growth plans that we have, our absolute debt number may not go down significantly.
Noted, sir. Thanks for patiently answering my question. All the best for the coming quarters.
Thank you.
Thank you. We have our next question from the line of Rohan from Nuvama. Please go ahead.
Hi, sir. Good evening, and thanks for the opportunity. So first question is on our CapEx plans and capital cost of putting a new greenfield plant, which you just mentioned that maybe in next year or onward, you will start looking at further greenfield CapEx. So what is the ideal CapEx cost now for the carbon black plant?
Carbon black brownfield, the capital cost is typically around 55,000 rupees. And greenfield, it is about a tad higher, maybe around roughly 60,000 rupees a ton.
Okay. So, sir, in terms of our ambition to keep on growing this business in terms of carbon black, and you mentioned that you are also looking to capture a higher share in the European market in exports. So, if I look at this over next maybe 2 to 3 years, 3 to 4 years, slightly longer term. So, how much capacity do you think that the companies you have planned to add, and the capex for that at 55,000 rupees per ton, does it justify the margin profile, current margin profile justify the ROC you will be looking from that angle, or you will first put the capacities and then expect the margin to ramp up slowly?
No, first of all, when we take a capex decision, this is based on the payback period, and we normally don't consider investment unless we see a less than 5 year kind of a payback, right? Even Tamil Nadu, for that matter, if you look at how it has performed in the first year, and the capacity came up in phases into 2024, and yet we could utilize it, to the extent of 55%, right? So we do a market assessment, and then we take an investment decision based on what is going to be the payback period. Next 2 to 4 years period, or rather I would talk about maybe period up to 2030. Our assessment of the market is that we are in a long-term growth phase, right? There's a lot of consolidation which has happened in different parts of the world, and which has created a very large and long-term growth opportunity. We believe that every year we'll have to keep adding between 80 to 100,000 tons of additional capacity going forward. Part of it will come through brownfield, part of it will come through greenfield. We are acquiring land which are adjacent to our plants. We are also planning to acquire, land with state government help where we want to put up greenfield. That's the broad strategy.
Okay. So second question is on related to aqua farm. So though I understand that in a recent time frame that there have been some high cost inventory liquidation and weak industry dynamics, but in general, now since the significant time has after the acquisition of this aqua farm. So now, in your understanding, the business dynamics of this aqua farm, what are the sustainable margins and growth profile you think that the company can have over next 2 years to 3 years time frame, and will it require further investment or capex? Because right now utilization levels are low, but after achieving a 70-80 capital utilization, do you think that there is a further capex opportunity? What are your game plan for actually related to aqua farm?
So like we said that India currently has some capacity cushion. So India, we are not looking to do any significant amount of capex. US is currently running at almost full capacity, and therefore immediately we are planning some capacity increase there. With respect to the margin profile, like I said, except 2024, if you look at the previous 3, 4, 5 years, generally this business was generating about 20% plus kind of EBITDA. And that was with, around 60% capacity utilization. So at a higher capacity utilization, operating leverage playing its own role, there is significant cushion for the margins to go up. Having said that, it's a new business for us. We are still, trying to integrate it with our business's efficiency. And that will also play a role. The synergies between the two businesses or the best practices that two businesses have developed, even that is going to create some benefits for both the businesses. So give us some time, maybe 2-3 quarters later, we will be in a much better position to comment on, what kind of margins can be achieved. But I think we are very hopeful about performance of this business.
Okay. And sir, from the balance sheet point of view, sir, currently definitely we are running in a very, tough, I will not say that favorable scenario, but yes, still, the leverage balance sheet is probably we have not seen in many years in the company. And so the current year you mentioned that the debt may not come down, but I'm just looking from next 2 years, 3 years perspective. I mean, with the limited cash flow generation and limited free cash flow generation, so to repay the debt, because you still have an greenfield ambition also in terms of PCBL's carbon black business as well, that may require another 500-600 crore, including, for the top up with the working capital. Even the aqua farm is also looking at growth, so the working capital requirement will remain quite high. So just wanted to understand that the balance sheet situation, you are quite comfortable living the debt level, what we have right now continuously remains there in the same ratio for next 2 to 3 years as well, or you will try to bring it down by any way, so that in any tough situation or any unforeseen industry scenario, we are not stuck with the leverage balance sheet.
Two, three things here. One, as a matter of our policy, we are debt averse. All through last 10 years, if you look at, we constantly kept on repaying our debt and brought it down to almost negligible level. We hardly had any long-term debt on our books, and that remains our philosophy. So we are not comfortable with any level of debt, leave aside the current level of debt. Having said that, the current market conditions offer significant opportunity, both for organic and inorganic. And just for the sake of avoiding debt, as a matter of policy, if we compromise on those, that would not have been a right strategy. And therefore, the debt that currently we have. Also, with all this capacity addition and new business acquisition, our potential to generate, higher cash from operations, that is increasing every year. Between last year and this year also, if you look at the consolidated EBITDA numbers, FY23 we did 775 crore of EBITDA, and this year we have done 1,075 crore. So it's a significant 38-39% kind of a jump in EBITDA, and we remain optimistic about return on our new investment, both in organic space as well as inorganic space. So from that perspective, with the potential of returns that we can generate, the debt that currently we have on our balance sheet is not much.
So just last bit from my side. So sir, in last 4 to 5 years, we have seen that our margin profile in EBITDA basis has been improving and now have gone to roughly 17,000-18,000 per ton. Still not sure whether these are the margins which are going to remain there, because if you look at 17,000-18,000 rupees EBITDA per ton and the capex cost down to is close to 50,000 to 55,000 tons, I think that there is still case for other players to add the capacities, and margin may in future come under pressure if the capacities increases. Or you think that these are the new industry norms and margin profile is going to get protected here and unlikely to go below 17,000-18,000 in any near future?
The market will go through cycles. All industries go through cycle. Our industry will go through cycles. We understand that. But we don't focus on market conditions, and our focus is primarily on how to improve our efficiency, how to improve our product portfolio, and how to increase our market share, how to ensure that we continue to retain our capacity utilization at a higher level. And those are exactly the few things which have helped us in last few years to maintain a good financial performance across different kind of industry situations. And that gives us confidence that even when capacity is getting added by other players and temporarily there is oversupply, then also we can maintain our margin. In fact, having spoken about surplus capacity, in last 3 years, India has added almost 600,000 tons of capacity, and which was 60% of their previous capacity. This addition was almost 60% in magnitude. The markets were oversupplied last 2-3 years. Yet if you look at our performance, we have constantly improved, and that is because of our ability to move between markets, our ability to introduce new products, right, and also to continuously improve our operational efficiency. So therefore, I'm not commenting on whether we will be able to, improve this margin from here or it will go down. Market may have conditions, but we are very confident about our own, initiatives.
This is from my side. Thank you.
Thank you, sir. We have our next question from the line of Arthur from ICICI Prudential. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just one question on the balance sheet. One is goodwill and the other is the intangible assets. So goodwill is fine, 1160 crores. But if you can just help understand what exactly is this 2,166 crores of intangibles, some breakup or some color on what these intangibles are.
Okay, so Arthur, as per Indian accounting regulations, when we acquire a business at a value which is higher than its net worth, then the difference is allocated to different intangible assets. So there is a fair valuation of tangible and intangible assets, right? And which is done by valuers, certified valuers. In our case, Deloitte has carried out this valuation. So what has happened is, in the process of fair valuation of assets of Aquapharm, intangible assets got created, like technical know-how, their IP, their customer relations, and these are all tax deductible. So there will be amortization of these assets over a period of 20 to 25 years. Goodwill, of course, this is not amortized, it is tested for impairment, but all the other intangibles which get created, they carry a tax benefit. And with the kind of intangible valuations that this business have been able to get, there's a good potential for some 500-600 crore kind of tax savings going forward.
Sure. So basically, you're saying this 2,000 crores will not get amortized, but you are saying we will test for impairment, basically, and basically, more or less, this is more of technical know-how. The transaction-related goodwill is 1,100 crores, but this is the separate which was there on the books of Aquapharm, basically.
No. So what happens is, in the fair valuation, whatever allocation can be made to specific assets, tangible or intangible, that is first made, and the residual value appears as goodwill. Now, goodwill is tested for impairment every balance sheet day, but rest of the intangibles have an amortization period. So this 2,200 crore worth of intangible assets will have an amortization period of 20 to 25 years. So there are a number of intangible assets which have different amortization periods.
Got it. So basically, we have to amortize this 2,000 crores over a period of time. Got it.
It's a very long period, 20-25 years.
Got it. Okay.
And goodwill, we don't expect goodwill impairment to be there.
Yeah, that's okay. Goodwill, I understand.
Yeah. Yeah.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you. Thank you, everyone.